This is Eric Leung on January the 23rd, 2024, and I'm now in Vancouver, BC, Canada. Introduce myself briefly. I got my master in economics from Washington State University back in 1986, and I got my bachelor in finance, same university, back in 1982, and I started to invest in the stock market when I was in junior high back in 1970s in Hong Kong. At that time, the Hang Seng Index was dropped down to about below 200 points from over 1,000 points. That was the time I started to invest. But so many years. Today, why I have to speak in English, because this is targeted to the investors from Korea, Malaysia, Japan, Southeast Asia. If you are the investor or the fund managers, please take a look of this YouTube. And this video is totally free of charges. I want to share my experience. I want to give you forecasts about the Hong Kong stock market so that hopefully you will not get lost in the future. Why I do this recording today is because of the following news. Number one, Hang Seng Index dropped to almost very low for last few years. So will Hong Kong Index, the Hang Seng Index, further drop down? And when will be the bottom, and where will be the bottom? I want to share with you and why, so that to avoid losses about your fund, your investment. Why I do this? Because I saw this news about Korean market where the fund managers lost lots of money, and most important are the funds were from the elderly, the old people, or maybe retirement funds. And the English newspaper also said that a few of the banks were under investigation, about 12 of them, and because they lost a lot of money by investing into the Hong Kong related stocks or index they call ELS. Okay, so for other investors or general investors or the public, let me explain a little bit about what happened if Hang Seng Index drop a lot. For example, from now 15,000 points, if Hang Seng Index drop to 11,000 points, and then further drop to 8,000 points, and then further drop to 3,000 points, what will happen? For example, look at Korea right now. If you hold some retirement funds, lots of money, and those money were from the elderly, old people, or from part of your government, and if you invest into a market that is stable, and that will be fine. For example, the US Treasury bills, 10 years, now the interest rate is 4.15%. 5 years, about 4.1%. Now those are, we call risk-free investment. But usually investors don't like this because they want to take a little bit of risk so that they get a little bit more return, so that the fund manager got a little bit more remuneration. I mean, like bonus. But on the other hand, if they don't understand the market, or if they don't understand that particular country or cities, then they will be in big trouble. I'm now 65 years old. Compared to yourself, if you are young managers, 40, 45 years old, 50 years old, you are still 15 years younger than me. So you have to pay attention and listen to what I explained to you about the Hong Kong market and the China market. We are talking about the financial market. We are talking about the stock market and the future. I'll give you some example so that if you understand the answer for the following few questions, then you can skip my video. If you don't know, then you have to carry on, and you better carry on so that to help your funds, to help your country, to help your people. For example, have you heard or read any news that in China, renminbi for $100 bills, have you seen that $100 bills, two $100 bills have identical number, identical currency number? If you did not know that, check up the news. Okay, so based on this phenomenon, even I think the Chinese government themselves, they did not know, the central government, they did not know what is the actual money supply in the country, because there are duplicate currencies happened, okay, for even for $100 bills, same number but two currency. That means people try to print double or triple with same number. If this is not true, then they have to prove that the news circulated, around in China for the last few years were fake news, or they should tell us, the public, that what is the actual money supply per year, per month, and for the last few years. If we don't get an accurate numbers, and if we cannot get an audited report from the CPA by Western world, can you believe that? So if you cannot verify this news, whether it's true or not, warning number one. Warning number two, do you aware that there are news circulated in China for many years that same identity, personal identity number, okay, same number, but there are multiple cards with multiple names that use the same ID number, or sometimes even same ID number, same name, real ID card, but used by two different persons. If you did not or never aware about this kind of news, please go to verify. Now, if this news cannot be verified, then how can you believe the population figures or the population growth in China? It means that you don't know the population growth, you don't know their population figures, you don't know their money, supply. And how about the debt ratio of each bank? How many are provision bad debts? How many are actual bad debts? Did they announce any number to you? Did they announce any audited report to you? Not even no audited report. They even try to kick out those big four accounting firms from China recently. So without knowing the actual population, do you have any accurate figures about the labor force in China? Do you have accurate figures about the actual demand of each city, including the big city like Beijing or Hong Kong? Hong Kong is okay, still so far so good. We got the population figures, okay, for the last few years. But maybe a few years later, we don't know. Then money supply, you don't know. Population growth, you don't know. The debt ratio, you don't know. That means how much the bank, has provision bad debts, or how much bad debts actually, so that because you don't know these figures, and that's why recently those big property tycoons, including in Mandarin Hangdai or Cantonese Hangdai, in Cantonese another one is Big Guiyuan, they are going to bankrupt. Okay, and the biggest fund investment company also went into bankruptcy recently. If this happened in USA, only one company went bankruptcy, then the stock market may collapse for 1/3, maybe 30%. But not in China. Why? Human control. If you did not aware about all these figures, if you did not aware all this phenomenon, then you have to ask another questions. What about the management of China Okay, do they know anything about economics? Do they aware about the importance of joint venture or cooperation with other countries? Do they aware that signing contracts they have to obey the regulations and agreements inside? Now think about Hong Kong. If they sign contract with UK, United Kingdom, and then they try to keep Hong Kong in a stable economy, or maybe not socialism for about 50 years, but up to now only about 20-something years, Hong Kong is totally changed. So if you are aware that they did not follow any principles and so on, then even though you sign contract with them, the Communist China, do you have confidence that they will follow the regulations? If you don't know this, don't know that, all the example I just told you, you don't know, then actually I doubt that you should take the risk, to invest into a market that you don't know. Now, look back to the market. Eric has a talent. I started to investigate this kind of stock market or graphics since 1970s when I was only a teenager. So for so many years. Okay, look at Hang Seng Index. It's now 15,000, or close to 15,000, 15588. Based on the current figures, you know that you are a fund manager, you are a financial specialist. I know this represents the net equities of the companies in the stock market. This represents the expected value of the net equity of the stocks in the stock market. In when? Maybe in short period of time, 1 year, 2 years, or maybe a few months. I use the word expected value. You should know that this is expected value. The net equity value may be higher or lower, but based on current situation, most likely the net equity value usually is higher, but because of expectation is low and people lost confidence, so that the market value of the stock go down or went down. But do you know that if people lost confidence into the stock market, then the expectation will drop further down, and then the stock market price will go further down, and so that there will be a crash finally, and all based on your expectation, the investor's expectation. What do you expect? Recently, Hong Kong since 2020, especially after they execute the national security law, and the newspaper, you cannot print out some freedom of speech. You cannot do any analysis, or you cannot do any criticism about the government. And then in this kind of environment, okay, and if you were the investors, okay, what do? You just try to invest into India, Vietnam, Singapore, Taiwan, some other countries. Now, if this carry on, and we as an investor, we do not see the Hong Kong government do anything to try to save the confidence of the investors, then this expectation will go further down. Come to a point that just like if the value of your company is now $15,000, and you want to sell it out because of bankruptcy or because of nobody trusts you, how much you can sell out? Half? You are very lucky. For half, that means about $8,000. You are very lucky. But usually I would say about 1/3, or less than 1/3, or maybe a quarter. If it's a quarter, then what happened? A quarter means it will go down to about 4,000 points, or near to 3,700 points. That was the figures back in 1987, before the Hong Kong stock market crashed in October. Check the figures. I don't have to do anything. All the stock market, all the value in my mind. This is history. Okay? So if people have no confidence and you're going to sell an asset which is worth 16,000 right now, then most likely you may only sell it out by a quarter of the price. That means about 3,700 points or about 4,000 points. That means Hang Seng Index should go back to the value in 1987. Then what next? Depend on the current government. If the government can do something to try to save the confidence of foreign investors, then okay, maybe another upturn. If not, who knows what will happen. But how to save the confidence of the investors? Very simple. Whatever they did in the last 2 years to scare away the investors, they knew better than us. Just do a reverse transaction. It's that simple. But go to yourself. If you are the fund manager, if you are the investment analyst, you ignore everything I said. You just pretending you did not aware everything I just questioned you. You are not responsible. And if you carry on to invest in this way, your funds will be in tragedy. And your investors will be same as the Korean people. And they will be, in tragedy also. Look at them. They are protesting by shaving their hairs to express their oppositions, their feelings about what they have been invested. They lost most of the money by the funds. And then they blame Hong Kong stock markets. Actually, they should blame the fund managers of Korea. And the fund manager of Korea should investigate, so look into the current situation, the economic situation. We call macroeconomics. And also the technical situation, the technical analysis. And to find out, should they invest again? Look at the technical analysis here. Okay, from 2018, all the way down. That kind of trend, even a beginners in investing market should know that it's still going down, further down, right? You don't have to teach by any others. You should know, you should aware. This is Hang Seng Index. The Hang Seng Chinese Enterprise Index, same thing. Why? Because Hang Seng Index contribute most of the Chinese enterprise. See? Top is here, going down, further down, and there's no limit. It's still going down because of what I just told you. Compared to Dow Jones, totally different. This is Dow Jones US market. So if you were the fund managers, why you have to invest in a market that's going down and down and down and further down? Especially only people said that, oh, you invest in the Hong Kong Hang Seng Chinese enterprise guaranteed 3%. 3% is very low. Even compared to interest rate at that time, maybe 2%, but only 1% more. Look at the US Treasury bills right now, 4.5%, 10 years. 1 year, a few years, 3 years, 4.1%. And 3% you invest into that market and you lost a big money from your elderly people. This is totally not acceptable. Either you are too young or either you should be investigated. And that's why the Korean newspaper said that 12 financial institutions were under investigation. Okay, so anyway, one more time, okay, if you don't know about the market, do not invest. If you do not know about the political situation of that country, do not invest. If you do not know the expectation of that country, do not invest. If you do not know the actual population growth of that country, do not invest. If you do not know the actual money supply of that country, do not invest. If you even do not know the balance sheet of the companies in that country, you don't know their total asset value, you don't know their total debt value, do not invest. And most important, you even don't know about the bad debts amount, even the bank. Then why you have to invest? So this is Eric Leung's recording on January 23rd, 2024. And remember, I study economics since 1980s. I invest into the stock market since 1970s. And I was grew up in Hong Kong. I was born in China. I came to Hong Kong in 1961. And I knew about China, I knew about Hong Kong, and I knew about the stock market there. And so I want to share what I learned from that stock market. Before 2020, Hong Kong stock market still okay. I would say okay means fair. But after 2020, it's highly risk because it's totally communist market. And then you still invest into it. That means you must take your own responsibility. And this is a big mistake. Thank you for watching. And if you like my video, just give me a like. And I would rather you share with others, especially other fund managers. Remember, you don't believe me today? Watch my video 3 months afterward. And then watch this video 6 months afterward. Okay? 1.5 years ago, I spoke in Cantonese. In this channel, I already forecast Hang Seng Index will drop to 11,000 pounds to 12,000 pounds. That was 18 months ago. And now it's going that direction. I just want to remind you. Okay? So, yeah, good luck. And I do hope that your funds and your management will improve in the future.